Hi everyone, this is Shefali Girdhirwal and you're watching ConsultEase with ClearTax. In this video, I'll be discussing the instances where you are not required to create an e-invoice in spite of the fact that your turnover is more than 10 crore rupees. So as we already know, and I already discussed this in one of my earlier video, that if your turnover is more than 10 crore rupees in any previous financial year starting from 18, you're required to comply with the provisions of e-invoicing, but there are some exceptions. So I can divide those exceptions into two parts basically. The first is the company level or the business entity level exemptions, and that part I will discuss later on in this video. And the second part is transaction or document level exemptions. So first I will discuss the transaction or document level exemptions, which are just connected with each other. So if the nature of transaction will change, the nature of document will change itself. So first of all, the documents which require an e-invoicing are invoice, credit note and debit note. So three basic documents, and here we can understand that credit note and debit note are not different from the invoice, but they are just the supplementary invoice or the reduction in the amount of the basic invoice. So these three documents requires the e-invoicing, and the first exception is B2C invoice. So e-invoicing is required only and only in the case of B2B invoices, that is business to business transactions. It means from a person registered in GST to a person again registered in GST. But in case of B2C transaction, that is the sale by a person registered in GST to a person not registered in GST, that is final consumer, in that kind of transaction you are not required to raise an e-invoice. So you are exempted from e-invoicing in the case of B2C transactions. Then second, so if I go by this logic, that in that particular case when there is a B2C transaction, there is no transfer of input tax credit, because the consumer or the end customer, or in the simplest word, the unregistered person, he is not going to claim any input tax credit, right? But remember this thing, export transactions, e-invoicing of export transaction is still required. So B2B transactions plus B2E transaction, that is business exports, in that case also you are required to raise an e-invoice. Next, the invoices of purchases. So do we raise invoice for purchase or for sale? So generally, commonly we raise the invoices for all of the sales we are doing through our business, but in some exceptional cases we also raise invoices for the purchases. So if any transaction is covered in reverse charge mechanism, that is RCM, and you have made that purchase from an unregistered person, the liability to create an invoice is on buyer, right? That is the recipient of the service or goods. So in that particular case we are making the invoice, but that invoice is not for the purpose of sales, that invoice is for the purpose of purchases. So e-invoicing of the invoice for purchases is also not required, right? So when you are making an invoice for the purpose of purchase from any unregistered person that is covered in RCM, you are not required to raise an e-invoice. Next, bill of entry. So for the import, you are filing bill of entry. For that particular document also e-invoicing is not required, because that is not your invoice. Apart from that, when we are making the sales of a exempted product, so what will be the document in case of exempted supplies? It will not be a tax invoice, it will be a bill of supply. So in case of bill of supply also, you are not required to raise an invoice for those documents. But if your invoice is having both exempted and taxable supplies, in that case we will not raise a bill of supply, but we will be raising an invoice. In that case you are also required to raise an e-invoice for that particular transaction. So these were the transaction level exemptions. Now let us have a look on the entity level or the business nature level exemptions from the e-invoicing. There is a very small list which we can go through. It's an insurance or banking company or a financial institution or NBFC. Then the goods transport agency. Remember that good transport agencies, generally their services are covered in reverse charge mechanism, but even if they are opting for forward charge and even if their turnover is more than 10 crore rupees, still they are not required to raise an e-invoice. A registered person supplying the passenger transportation services. Registered person supplying services via admission to the exhibition of cinematographic films in multiplex services, that is cinema hall. Then input service distributor. So some of the taxpayers can distribute their input tax credit where they are making the centralized purchases, and for that particular purpose they raise a document. That document is also exempted from the e-invoicing requirements. Then an SCZ unit. So it's just unit and not the developer. So for example, the Gurgaon SEZ that is being developed by DLF, so DLF is required to raise an e-invoice, but the units in the SEZ, so there may be multiple units in those SEZs, so they are not required to raise an e-invoice. Generally the SEZ units are engaged in the export, mostly they are 100% export oriented, or they have to comply at least some minimum threshold of export to exist, or to keep that nature of SEZ unit. So in that case, e-invoicing is not required. So this was the brief list for the exemptions from raising an e-invoice in some of the cases. So they may be at the industry level or transaction level. I have discussed both of them. So with this important information, I would like to close this video. Thank you so much, everyone.